This
Hello,
conference will now be recorded.
Hello, it's part two in my video series. Given that it's tax time, March 9th, so this one's going through some potential tax law changes proposed by the new Biden administration. I'll share my screen here, go through some slides. It's a lot that was proposed while campaigning. So my hope is to try to focus in on some of that so that we can strategize a path going forward on what's potentially there and be tax efficient in the way that we're doing that. This is a non-political summary of what was discussed, only intended for informational purposes. As I mentioned before, it focuses on the tax planning side, although I often will dive into some of these other areas. So during the campaign, President Joe Biden released a proposed tax plan. A key focus was on higher taxes on the wealthy and corporations. They're not yet law, but I think it's important that we're aware of what those potential changes are. One of them was increasing the corporate tax rate. It was reduced in 2018 from 35% to 21%. This would raise it back to 28% as proposed. If you earn a lot of income over 400,000, there was a new proposed tax rate, which is actually what the old rate was prior to 2018. It was not specific, but here's maybe a visual of what married filing jointly tax brackets might look like if this happens. Also, if you have lots of income, then the capital gains rate might be changed. This might be what that might look like. They also proposed a deduction cap of 28% for those earning more than 400,000. Long story short, even if you were itemizing a greater amount than that, it might be capped at 28%, as this illustration shows you. It also proposed phasing out small business income deductions if you have income over 400,000, but it's highly complicated. So there'd be a lot more to dive into that, but acknowledging and being aware of that proposal is important. The stepped up basis was talked about being eliminated. This wouldn't apply to maybe an IRA or retirement accounts, but if you were to inherit land or stock that had been bought years ago, this potential tax law change could be a big deal. If maybe it's been in the family a long time and has grown substantially in value over that period of time. For the same reason, if you had an estate that was worth a lot, then this proposed change is important to be aware of as well. I'll spare you reading their quotes. So since we have both a Democratic House and Senate, the changes need to be watched because they're slightly more likely than maybe they were with the split House or split Congress. Their focus right now is on the COVID relief bill that's near being approved as of today. So again, to mention, these are not law yet. They're just proposed, but better to be proactive now than to try to react later, maybe when it's too late. Stay safe. Thank you for letting me keep you up to date on odds and ends. Of course, if anybody else can benefit from this, if you have a rich uncle or some things, maybe land in the family, whatever it might be, feel free to share this with anybody you think would benefit from it. And be sure to very closely read all these disclosures because they're very interesting. Getting. So I will, this is series 2, and I'll try to get out 3 to you shortly. Thanks a lot.